Hello and welcome to this latest market alert. Today I want to talk about a potentially major event that we've got in the coming days, which could have a major impact on the markets, and I'll be running through the US dollar, US stocks, and also gold. Now, if we look at the calendar here on the X Station tab, you can see if we go down to Wednesday, we have the first of what is 3 central bank decisions in less than 24 hours, with the US central bank, the Fed, expected to announce their latest policy decision at 7 p.m. UK time. The press conference with Chair Powell will follow 30 minutes after. And while we do have the Bank of Japan following that overnight, and also the Bank of England on Thursday lunchtime, I think the Fed is potentially the main event to watch out of these 3. The reason for this is there's quite high expectations that we see a change in Fed policy soon. The US central bank haven't cut interest rates in over 10 years, but there's now an 80% probability that they'll cut by July. So that's by the end of the next meeting. The market's also pricing in 3 rate cuts this year. And if we do see the start of a cutting cycle from the Fed, then it could have a big impact on the market. So if we look first here at the US dollar, you can see I've got a daily chart up on the US dollar index. We had quite a strong move higher on Friday. Now, this came on the back of some slightly better than expected retail sales data from the US, in particular the revisions to prior weakness. And you can see here we did actually hold this support around 96.40 and push higher once more. There is some suggestion that the markets may be getting a little bit ahead of themselves in terms of pricing in all these rate cuts from the Fed. And if they do disappoint, then we could see further strengthening in the US dollar here, with the US dollar index having potential resistance around 98.25. Looking at US dollar pairs and Euro US dollars, one of the nicest setups I think at the moment. And you can see here on the daily time frame, we had this weakness in the market on Friday. So that came about from that US dollar strength as price pulled back once more. Now, looking back over the last 9 months or so since last September, we've really been in a fairly narrow range for this market. You can see any advances have been capped by this yellow line here, which is a 200-day simple moving average. You can see on several occasions prices failed to break above there. And most recently, at the start of last week, it was looking like it was having another attempt to move above this simple moving average. But once more, the market rejected this level and we've fallen back down lower. So the highs from last week around 113.50, a potential area to look for resistance. And these lows here around the 111 handle could have longer term implications. So if we look here from a support perspective on a weekly chart of the Euro US dollar, you can see this area here around 111 has held up pretty well and provided a floor in the past couple of months. And this also coincides with this support region we got here back in 2017. If we do get a breakdown below 111, then we could see further downside, and this gap higher that we got on the French elections back in 2017 could be closed back down to 107.10. If we do break above 113.50, then we could see further upside and a push back into these mid-teen levels. It's not just FX that can be sensitive to Fed rate decisions, also US stock markets can be highly sensitive. And here we have the S&P 500, or the US 500 as it's called on X Station. And at the moment, the market's trading not that far really from its all-time high of 29.63. At current levels, just below 2,900, it's between 2 to 3% below the all-time peak. And you can see we've had a nice run higher really after we broke out of that downward channel that contained price during the pullback that we saw last month. If we do get a positive reaction to the Fed here, we could see a move back above 29.12 and another tilt to that all-time record high of 29.63. If we do get above that level, then we could see the 3,000 handle trade before the week is out. Alternatively, if the Fed disappoints and we see a less dovish message than expected, there could be a bit of a shock in stocks. And if we drop down below 28.68, then we could fall back towards this recent lows around 27.28 that has provided support. Finally, just turning our attention to commodities, we want to talk about gold. Gold hit its highest level in 14 months on Friday, above 13.55, but you can see we got a bit of a rejection, aided by that better than expected US data. And today we've seen further downside, and the market's now around $25 or 2% off those highs that we saw last week. Now, this is a potentially longer term resistance level, which I'll show you on a weekly chart in a moment. And how price reacts around 13.65 area could be key going forward. If we fail to get above there and this holds strong, then we could see further pullbacks, and you could see these recent lows here. around 13.20. First day to look for possible support, but if we do get a drop down below there, then a lot of this advance that we've seen in recent weeks could be handed back, and we could go back below 1300 and down towards 1265. Now, if we just turn to a weekly chart, you can see here, this is going all the way back to 2008. You can see the impact here that Fed rate cuts had on the gold market when they cut during the last financial crisis around 2008. You can see we had a very strong move higher. Now, whilst situations are quite different at the moment to what we had back then, there is quite a strong correlation previously with Fed rate cuts boosting the price of gold as the US dollar falls back. So if we do see a dovish Fed and we get rate cuts in the coming months, we could see further upside for gold and a push above this 1385 level. Alternatively, if it fails to break above there, then we could see a pullback and hold around this region. Okay, thanks for listening. Best of luck if you're trading over this Fed rate decision on Wednesday.